I'm sure you've tried getting funded by a prop firm already. You want to pass a challenge, you want to get the funding from them to be able to trade with, and you want to skip this whole idea of getting the money yourself, finding out the capital to trade yourself, and of course save time, save months of doing that, and get trading full-time faster. But there's this one lie that prop firms tell you that they don't want you to figure out and understand, and I'll share with you what that lie is in this video today. By the way guys, I'm staying here in this hotel in Hua Hin, Thailand on the beach. I have a pretty cool room with the view right from the beach over here. Okay, so basically what that lie is people in prop firm being so focused on the idea of getting capital that they forget the whole part after. All that people care about regarding prop firms is getting the capital. They think that once they get this capital, they'll be able to just roll with it and be able to make profits from it every month, withdraw, and then live with it on a monthly basis. While we all know that the biggest battle is not getting the capital, it's actually keeping it. It's being able to keep the capital long term. Because most people, like they've published stats with these prop firms, that 84% of people fail the challenge after starting it. But not just that, also half the people who pass the challenge, that's 16% or so. Half of those, so 8%, end up losing the account before they get their first paycheck from the prop firm. So it's not just about passing a challenge. Anyone could be lucky. They could take a big trade, they could be in the profit really quickly, they could pass the challenge right away. Then from the other days left in the challenge, they just take some small trades to be able to cover the minimum trading days for the month. So it's quite easy to pass a challenge. A lot of it is about luck. And prop firms don't say this because, of course, they will attract a lot more people who don't know what they're doing at all. But you know, there's still a lot of luck involved into it. The big battle happens after you've passed a challenge, when you're ready to keep that account. How are you going to be able to keep that capital for a year, for 2 years, 3 years or more? How are you going to be able to respect the risk on this account? You know that prop firms have a very tight risk management. They always have rules for maximum drawdown, daily drawdown, all these things. And if you just go beyond that, if you end up having a bigger loss than you expected, or you have a really, really bad month, you can lose the account. So now this brings us the question of how do you keep that account for the long run? How do you make sure that you're gonna be able to, yes, get funded, get the account from the prop firm, but also keep it for a couple of years from now? Alright, it's a new place, new day. I guess that's what they say. Let's talk about how do you maintain that funded account once you've got it. How do you keep it for the long term? Again, I don't know if you need me to remind you the stats, but most people who get funded by a prop firm lose their account over time. It's not because they're bad traders necessarily. It's because they don't know how to keep it, how to keep that capital in their account for the long term. First things first, understand the risk parameters and your numbers. What that means is that prop firms have risk parameters that you have to respect. A maximum drawdown, maximum daily loss. Usually they won't have any target, but they will have a maximum loss you can reach before you lose that funded account. Really important to understand and to keep that in mind. And then your numbers. What numbers can you expect from your trading? Are you doing a 5% a month? Are you doing a 2% a month? Are you having big drawdowns and then big wins after? If that's the case, no worries. You just need to be able to tweak it a little bit so that you're able to have a smaller risk per trade and then sustain these big losses. Okay, number 2, get familiar with the cycles in the market. I'm surprised how many people don't know this. Sometimes the market gives you really good setups and they all work out for some reason, which you cannot really tell. Sometimes the market gives you many setups, but they all not work out. Sometimes the market gives you no setup at all. For like a week, you have no setup, you can trade, nothing good, and then you have to stay away and wait a little bit. If you know the cycles, like when your strategy tends to perform better, when it tends to perform not so good, you can make a decision on what to do, whether you have to stop trading, reduce your number of trades, or do something else more productive when the market gives you no setup. Number 3 is taking time to get familiar with the account. Now, most people, when they go to a bigger account, they're excited, they want to jump right in, they want to make money with it, and then because of that, they fail. What if instead you took, let's say, a month, even maybe 2 months to kind of get familiar with it? So trade very small, make almost barely no return, maybe a 0.5% a month, but you just practice. You practice taking your trade, practice being on that bigger balance, try to slowly scale into your bigger position size. Because if you use like a $5,000 account, you move to a 100K account, that's a 20-time increase. If you just go straight with that with the big numbers, you might be scared, you might have issues with your mindset, and you want to be able to deal with those first. If you progressively increase your size, your risk per trade, you'll be a lot better there. Start with your normal size we're using on your $5,000 account, go from there to a $10,000 account, a $20,000 account, and then go up from there over time. You gotta increase these things progressively if you want to be able to avoid the mindset issues that come up with having a bigger account. That takes time, but it's definitely more rewarding and useful to do it that way compared to going all in first and then losing the account after. By the way, if you're enjoying this video so far, make sure you give it a like. Also subscribe to these videos. I want to publish videos like this 3 to 4 times a week, so make sure you are subscribed to be able to be notified of those. Also click the bell next to the subscribe button to be notified of future videos, and hope you are gonna get value out of them. And let's get back to the video. Okay, number 4, this is a big issue with a lot of traders. So just picture this. They get their funded account, they're happy with it, and then they see all these ways to make things better. Make their strategy better to get more profit, tweak this entry parameter to get more out of it, to enter earlier in the market, being at the chart longer hours to be able to see your trades and exit at the perfect time in the market. So they try to make everything better. But here's the lesson: stop trying to make that better. Stop trying to make everything better. For a simple reason that when you try to make things better and perfect, things just start to fall apart and nothing gets perfect. You want to aim for small improvement, small incremental improvement over time, not one big chunk, not one whole big change in your account, in your strategy, just a small tweak that you've tested thoroughly. You know it works, you've been doing your homework with it, you've been researching it more and more, you know this is likely to work, then you make that change. But not until you're sure, and you don't do it all at once, like changing everything, making everything better. And or what a lot of people do, which is really sad, is they get funded and right there they throw a strategy away, start with something new, a newer strategy, more powerful, they say or they think, then they fail with that. Okay, so keep what you know, trade only what you know, and you'll be ahead of a lot of people. Number 5 on this list is to accept your mistakes and learn from them. There's a big issue with people not accepting their mistakes in trading. They think they can change things really quickly. They just say, oh, I'll be better next time, I'll be able to fix that next time, I'll be careful. But then they don't really learn from their mistakes because they didn't accept them first. So accept your mistake, understand mistakes are part of the process, they are normal. You just gotta be willing to sit down with them. So like learn from them, take notes, find an action step, things you can do, some tweaks you can make to be better next time with those mistakes in mind. So this is how you get funded by a prop firm and most importantly keep the account. Hope that was useful for you as always. Hope you got some value out of it. Subscribe if it's not done yet. I publish videos like this 3 to 4 times per week, and I'll catch you back here in the next video pretty soon. Ciao.